over many years, but they weren't able to get it done. Many people tried. And Ronald Reagan was really the last to make a meaningful cut and reform, and ours is cutting and reforming. We emphasize cut, but the reform is probably almost as important. We've wanted to do it. It is very tough politically to do it. Hard to believe that would be, but it is very, very tough. That's why it hasn't been done in close to 40 years. And once we got it going, it was going. And the big, and I wouldn't say a total surprise, but one of the big things that happened and took place is AT&T and some others came out very early and they said they were going to pay thousands and thousands of dollars to people that work for their companies. And you have 300,000, 400,000, 500,000 people working for these companies. And all of a sudden it became like a big waterfall, a big, beautiful waterfall, where so many companies are doing it. And even today they just announced many more. But every day they announce more and more. And now it's a fight for who's going to give the most. It started at 1,000. Now we have them up to 3,000. This is something that we didn't anticipate. Oftentimes in business, things happen that you don't anticipate. Usually that's a bad thing, but this was a good thing. This came out of nowhere. Nobody ever thought of this as a possibility even. It wasn't in the equation. We waited, we said, wait till February 1st when the checks start coming in, and people, Klaus, have a lot more money in their paycheck, because it's not just a little money. There's a lot of money for people making a living doing whatever they may be doing. And we really thought February 1st it was going to kick in and everybody was going to be, well, we haven't even gotten there yet. And it's kicked in. And it's had an incredible impact on the stock market and the stock prices. We've set 84 records since my election, record stock market prices, meaning we hit new highs 84 different times out of a one-year period. And that's a great thing. And in all fairness, that was done before we passed the tax cuts and tax reform. So what happened is really something special. Then, as you know, and as I just said, Apple came in with $350 billion. And I tell you, I spoke with Tim Cook. I said, Tim, I will never consider this whole great run that we've made complete until you start building plants in the U.S. And I will tell you, this moved up very substantially. But when I heard 350, I thought they were talking $350 million. And by the way, that's a nice sized plant. Not the greatest, but not bad. And they said, no, sir, it's $350 billion. I said, that is something. Well, we have tremendous amounts of money, including my newfound friends from last night, great companies. They're all investing. When one of the gentlemen said he's putting in $2 billion because of the tax cuts, I said to myself, wow, he's actually the cheap one in the group, because they're putting in massive numbers of billions of dollars. So I think you have a brand new United States. You have a United States where people from all over the world are looking to come in and invest, and there's just nothing like what's happening. And I just want to finish by, I have a group of people that have been so outside. I have a whole lot of them, so I won't introduce because then I'll insult at least half of them. But I've had a group of people that work so hard on this and other things. And we're really we had a great first year, so successful in so many different ways. And there's a tremendous spirit when you look at all of the different charts and polls, and you see, as an example, African-American unemployment at the historic low. It's never had a period of time like this. Same with Hispanic. Women at a 17-year low. It's very heartwarming to see, but there's a tremendous spirit in the United States. I would say it's a spirit like I have never witnessed before. I've been here for a while. I have never witnessed the spirit that our country has right now. So I just want to thank you all, and all of those that are pouring billions of dollars into our country, or $10 into our country. We thank you very much. Thank you.
Mr. President, I will ask you maybe a personal question, but before doing so, I just
sounds very interesting.
Acknowledge.
I didn't know about this one.
I would like to acknowledge the strong presence of your cabinet members
yes.
here. who tremendously contributed to the discussions.
Good.
The last
I would
days.
like to do that. That's very good.
Yeah. Now,
Stephen, Wilbur, Gary, Robert, even my general and my various other generals, you know. We're making our military protection a little bit better for us, too. So thank you very much. Does everybody understand that? I think so. Thank you all for being here.
now my maybe personal question would be, what experience from your past have been most useful in preparing you for the presidency?
Well, being a businessman has been a great experience for me. I've loved it. I've always loved business. I've always been good at building things, and I've always been very successful at making money. I'd buy things that would fail, that would be failures, and I'd turn them around and try and get them for the right price, and then I'd turn them around, make them successful. And I've been good at it, and that takes a certain ability. And, you know, historically, I guess there's never really been a businessman or business person elected president. It's always been a general or a politician. Throughout history, it's always been a general. You had to be a general, but mostly it was politicians. You never have a businessman. And then, in all fairness, I was saying to Klaus last night, had the opposing party to me won, some of whom you backed, some of the people in the room, instead of being up almost 50%, the stock market is up since my election almost 50%. Rather than that, I believe the stock market from that level, the initial level, would have been down close to 50%. That's where we were heading. I really believe that, because they were going to put on massive new regulations. You couldn't breathe. It was choking our country to death. And I was able to see that, Klaus, as a business person. The other thing is I've always seemed to get, for whatever reason, a disproportionate amount of press or media. And throughout my whole life, somebody will explain someday why, but I've always gotten a lot. And as a businessman, I was always treated really well by the press. You know, the numbers speak and things happen, but I've always really had a very good press. And it wasn't until I became a politician that I realized how nasty, how mean, how vicious, and how fake the press can be as the cameras start going off in the back. But overall, I mean, the bottom line, somebody said, well, they couldn't have been that bad because here we are, we're president. And I think we're doing a really great job with my team. I have a team of just tremendous people. And I think we're doing a very special job. And I really believe it was time. And it was time to do that job, because I don't think the United States would have done very well if it went through 4 or 8 more years of regulation and really a very anti-business group of people. We have a very pro-business group. We have regulations cut to a level. In the history of our country, Klaus, this was reported recently, in 1 year, we've cut more regulations in my administration than any other administration in 4, 8, or 16 years in the one case. We've cut more regulations in 1 year, and we have a ways to go. I mean, we're probably 50% done, and we're going to have regulation. There's nothing wrong with rules and regulations. You need them. But we've cut more than any administration ever in the history of our country, and we still have a ways to go. So I think between that and the tremendous tax cuts, we've really done something. And one other thing I said, and I saw it last night with some of the leaders and the business people, I think I've been a cheerleader for our country. And everybody representing a company or a country has to be a cheerleader, or no matter what you do, it's just not going to work. And the reason I'm a cheerleader is because it's easy, because I love our country, and I think we're just doing really well. And we look forward to seeing you in America, special place, and where you are is a special place also. Thank you all very much. I appreciate it.
Thank you. Thank you very much, Mr. President, for being with us. The World Economic Forum community who is assembled here will be certainly, and I quote you from the last piece of your remarks, will be certainly be among the hard-working men and women who do their duty each and every day making this world a better place for everyone. Thank you very much.
Thank you. Thank you very much, everybody. Thank you.
Who has actually been a friend of mine for 40 years. We met at Oxford.
Nice.
And to his left is Mary Callahan-Erdos, who's Chief Executive Officer of JP Morgan's Asset and Wealth Management, whom I've met and shared panels with now on quite a few occasions. And I'm looking forward very much to this one. So let's start with the short-term economic outlook. And you've just recently at the IMF produced your update, which is wonderfully cheerful in every respect, and forecasting 3.9% growth for the world this year and next. So, what could go wrong?
Well, let's celebrate what could go right for the moment, because we are in a sweet spot, as I've said. 3.9, 2018, 2019, it's not bad. What I think is even more interesting is that about 120 countries have actually seen their growth increase last year, and we only have about 1/5 of the emerging and developing countries that are seeing their GDP on a per capita basis decline. So it's well spread out, and it's shared between advanced economies, emerging market economies, and the part of the world that I would certainly worry most about is sub-Saharan Africa, where we have a combination of factors that lead to that lower income per capita. I think we should celebrate. We don't do that so often, and at the IMF we identify negative and downside risks in the most, but we should celebrate the policies that have been implemented by policymakers and in particular by central bankers. I think one of the reasons we are in that sweet spot at the moment, it's a cyclical upswing, let's face it, but it's largely attributable to policies that have been implemented. Monetary accommodative policies that we had no idea about 10 years ago. Fiscal policies in many corners as well, which have been reasonably good. It's debatable what was done exactly, say, 8 years ago. But in the main, it's the result of good policies. What could go wrong? I'll mention 3 vulnerabilities as I see them. First of all, financial vulnerabilities. And while the US tax reform certainly will have positive effects in the short term for the US and for other countries around, it might also lead to serious risks, and we can discuss that later if you want. And that has an impact on the financial vulnerabilities, particularly given the high asset prices that we see around the world and the easy financing that is still available. I would say that the second risk, which is short and medium term, but needs to be addressed in the short term, is the excessive inequalities that in many places are growing and creating those fractures that Klaus has identified as one of the themes of the World Economic Forum this year. And I would say that the third downside or risks that I see is the lack of international cooperation and the geopolitical risks that could be created as a result. I'll stop here, but happy to comment on any of those three.
Well, these are huge points, and we will certainly come back to them. Let's turn to one of the central bankers who has produced these outcomes. Central bankers have certainly become controversial. They have been described by a well-known authority as the only game in town. And I think many of us feel that's probably truer of Japan than anywhere else. So that there were 3 arrows, and yours is certainly the arrow that's gone furthest, Mr. Kuroda. So tell us about your remarkable monetary policy, its success, and how you're going to get out of it.
Thank you, Martin. Let me first explain the current status of the Japanese economy. The economy is expanding moderately, supported by both domestic and external demand in a well-balanced manner. Real GDP has continued to grow for 7 consecutive quarters, and the average growth rate during that period is close to 2%. Since Japan's potential growth rate at this moment is slightly less than 1%, 2% growth in the last 7 quarters is really substantial improvement. And the unemployment rate has declined to less than 3%, actually 2.7%, which is, even in the Japanese context, is really full employment. And the current economic recovery has lasted for over 60 months, and this is the second longest boom in the post-war era. Going forward, Japan's economy is likely to continue its moderate expansion, sort of virtuous cycle from income to spending is expected to be maintained in both the corporate as well as household sector on the back of highly accommodative financial conditions. On the price front, annual consumer price inflation, excluding fresh food, has been approaching 1%, but has remained slightly positive, excluding the effect of energy prices. In Japan, a contrast between strong economic recovery and relatively weak prices stand out as much as or even more than in the US and Europe. However, we think that with the output gap further improving and labor market conditions steadily tightening, firms' price-setting stance is expected to become gradually bullish, and medium to long-term inflation expectations are projected to rise. So while consumer price inflation is likely to increase toward the price stability target of 2%, the deflationary mindset entrenched among people under prolonged deflation has been more tenacious than expected. Therefore, the Bank of Japan will continue to support Japan's economy and prices by pursuing powerful monetary easing with persistence under the so-called quantitative and qualitative monetary easing with yield curve control. There are various, of course, risks in the short to medium term, but from my perspective, they are mostly external, including some geopolitical risks.
Can I just follow up on one question, because it's one that is more generally discussed, and it's an issue that you face in a way that Mark Carney doesn't. So here you have an economy that is growing significantly above trend for a length, quite an extended period. you have unemployment at 2.7%, and which is clearly very low and falling. And you announced when you became governor, not you, the government and the Bank of Japan together, that you would hit an inflation target of 2%, which didn't seem, most people would say, if the economy was like this, you would have got there. So why is there no inflation? What do you think is going on, and how does that fit with what we're seeing in many other areas like Eurozone and the United States as well?
I think there are two factors behind rather slow response of prices and wages to strong economic growth. One is sort of universal common factor like globalization, new technologies, even Amazon effect and so on and so forth. All of them may make inflation rather subdued. This is a universal factor. But second, Japan-specific factor is, as I just said in my initial remark, that is to say, after 15-year-long deflation from 1998 through 2013, deflationary mindset, people expect prices and wages do not rise. And this kind of mindset is rather strong, and it's not so easy to eradicate this kind of mindset from Japanese households as well as companies. But there are some indications that wages are actually rising, and some prices have already started to rise, and even medium to long-term inflation expectations, which had been so weak in the last couple of years, are now slightly picking up. So there are many factors which made achieving 2% inflation target or price stability target so difficult and time-consuming, but I think we are finally close to the target.
Okay. We hope so, since you promised the government that you would deliver it. Mark Carney, you don't have the problem of low inflation at the moment. You do have the problem of managing monetary policy in the face of some strange decision the British people, God bless them, took in June 2016, one which probably those who have ever read me will realize I wasn't wildly enthusiastic about. You have started a tiny increase in interest rates, so a step towards normalization. How do you perceive the monetary policy challenges for you and other central banks in similar situations ahead in this strange environment of strong growth, but still generally contained inflation, and where among the other things people are concerned about is that this normalization process might reveal more financial fragility than is now evident. So what is the path forward?
Okay. In the next, 15 minutes, should I answer that?
You can do it in 2 minutes.
I'll do it in 2 minutes. To do it in 2 minutes, let me generalize and talk about the overall normalization challenge, if I could. And if I could pick up on some of what both we just heard. The nature of the expansion, the recovery, is, as the IMF has just indicated, it's stronger, it's getting up to around 4%, it's broader, it's 90% of economies growing faster than potential, so slack is being used up, and it's also healthier. I'll give you one example. In terms of the acceleration of G7 growth in the last year, 80% plus of that has been investment picking up and net trade picking up. So this is not a consumer boom-led recovery, this acceleration. And all of those have consequences for normalization, as you can anticipate. So the first, slack being used up, is the Phillips curve coming back? That's the question. In the face of bigger secular pressures, globalization, technology, as Kuroda-san just mentioned, and all of us have been discussing over the course of this week and at other times. I think a crucial point is as you get towards full employment, as the output gap shifts, they call it a Phillips curve for a reason, and you start to see the convex element of the slope. So the pickup should be there, or should begin, maybe not quite to historic degrees. So we have to be cautious, but should come. And if you look at wage behavior in the U.S., in the U.K., some of the other, maybe I shouldn't speak for other economies, but you see that firming of wages, which once you adjust for poor productivity growth and some underemployment, and up until very recently a relatively low level of churn in the labor market, it starts to fit together, at least directionally. So there's that aspect which is pushing up. The second element pushing towards normalization, I should say, of policy. The second element is that healthier a bit, more investment as part of the recovery, so investment picking up relative to savings, and we've seen, as you know, a big shift in fiscal policy. Think on average advanced economies about a 2.5% drag from fiscal policy 2010, 2014, now adding, depending on how you use multipliers, particularly for the U.S., but adding to growth, maybe 0.5% or so on average across the G7, somewhere in that zone. So, but that's a big, big swing. So investment up, savings down, pushing up on the equilibrium rate of interest. The third element of that I'd highlight is just the stance of policy as a whole of, if I could use the term for these purposes, the G4. So the members of the G7 who were practicing quantitative easing, and if you look at the flow of net fiscal issuance minus what the bonds being taken out of the market by asset purchases, whether it was the BOJ or the ECB or the Bank of England or the Fed, we've shifted from, collectively, 2013 to 2017, basically no net flow, or even bonds being taken out on net, to this year on the order of magnitude of about $1 trillion of net issuance based on announced plans, and potentially that going up to $1.5 trillion or higher next year. So that one would expect to push up on rates. So in the context of normalization, you have sort of real economy providing some support for it. You have some technical factors which play into it. You have a very tough judgment to be made around where is the equilibrium rate of interest, which has been very, very low and arguably should be raising a bit. You can make a judgment about direction, but probably not, certainly not with any precision about degree. And so that's going to require, one has a sense of direction, I would say, as a whole for the central banks, a regime shift in terms of towards normalization, but a requirement for each of us to be quite prudent and patient as appropriate in making those judgments. Last thing I will say, and I'm not going to expand on it unless you want, I mean, the UK is in a relatively unique situation in that over the course of the next year, as the negotiations with the EU27 progress, we're going to find a lot more about what the supply capacity of the economy is in the near term, what the right level of the exchange rate should be, whether or not there are going to be tariff or other trade costs, and how all of this affects demand. And of course, it is all of those factors together which determine the appropriate stance of monetary policy.
Let me ask one follow-up question, because before we go to the...
I was trying to run out the clock.
Yeah, I will come back to that in a moment. Yeah. You have had a central role through the Financial Stability Board in strengthening the global financial system. I get, every time I write on this, sort of hundreds and hundreds of comments below on the lines of, these crazy central banks have already, and if they haven't already, will soon have created the most unmanageable asset price bubble ever, the omni bubble. It will burst, probably as and when you raise rate, you collectively, and the crash will lead to total meltdown of this sort of thing. On a scale of 1 to 10, how likely is that?
Which way is the...
Yeah, you can choose. 1-0 risk, essentially, go ahead, all of you people
Look,
go away and not worry at all, and 10, run away and get a big umbrella because the house is going to fall down on you.
2 points. It's a composite probability. What's the probability there'll be an adjustment in asset prices? Yeah, that probability has gone up. If you look at corporate bond spreads, high yield spreads, they're at near all-time lows. Last seen, just before LTCM, just before the global financial crisis, in a rising rate environment. If indeed that is the right stance of policy, one would expect some adjustment there, other asset prices accordingly. I think the big question is not, the market will find the right level for assets. The question is whether the core of the financial system is in a position that it's going to amplify those movements in an adverse way, and there'll be a feedback to the real economy. And on that component of the probability, I would put that as quite low, because it's not just the regulators, it's the financial institutions represented here and across the world that have really transformed the liquidity and capital positions of the institutions. I'll give you very quick numbers, if I may. Pre-crisis, the coverage of short-term liabilities for banks, the major banks, particularly in the UK, plus their access to central bank facilities was 10%. Now it's 110%. So they're fully covered, both their own liquidity and their access to our liquidity, on all their short-term wholesale liabilities. That is a huge move. Second figure, and people can debate about it, we've had healthy debates on it, but the overall level of capital standards have gone up 10 times, but the actual levels of capital have gone up about 5 times for the major banks, apples to apples comparison in terms of capital. That's a huge shift, and it's the type of shift in the judgment of the Bank of England, and I'll be around if this judgment is tested, that would allow that system to withstand a shock of a disorderly Brexit, which is a big call, but we're confident in terms of the orders of magnitude because we've tested it. And then the last point is we're not all the way there to ending too big to fail, but we have made a huge amount of progress in terms of reshaping and the institutions reshaping their business lines, being able to separate their high street or their retail component of their banking, and adding on top of all that capital big layers of bail-inable debt. For the UK, and I'll stop with this, the major banks have 25% total loss absorbing capacity. So even if they go through that capital, there's another layer of securities that are held by institutional investors, some of whom represented in this room, who would find out that they're no longer debt holders, but they're equity holders. So all of that provides real shock absorbing capacity for the core of the system. That is not to say that asset prices couldn't change, but it's to provide a measure of confidence that if and when they do, even if they are sharp changes, that the system isn't going to amplify that impact.
I think this is incredibly important. So the conclusion I would draw are 2. One is that all those commenters, and possibly there are 1 or 2 in the audience who are just worried that the whole world will fall apart in the next couple of years because policy normalization and asset price collapses should calm down and feel completely and utterly relaxed. And the second conclusion, which is completely personal, that if there are any politicians in the world who are telling us that the continually rising stock market is an indication of how successful they are, they might find that central banks are going to get in the way. Let me turn to you, Carrie Lam. Tell us about how the world looks from your perspective, both in Hong Kong, as a core part of the Asian economy, financial center, and, if you can, about the rather large place with which you're closely connected and to your north.
Yes. Well, as a small and externally oriented economy, but at the same time, one of the freest and most competitive economies in the world, Hong Kong certainly benefits from the global economic recovery. So we are doing very well last year. We are projecting the full year growth for 2017 at no less than 3.7% in real terms, which is considerably higher than the 2% in the preceding year, that is 2016. Christine kept on reminding us that while the sun is out, fix the roof. I'm pleased to tell you that I have not discovered a leaking roof in Hong Kong yet, but similarly, while the sun is out, it's always good to strengthen the foundation. Strengthening the foundation will enable Hong Kong to seize the many opportunities available to us arising from China's economic policy, and also Asia, because Asia's growth now accounts for 60% of the GDP growth worldwide, and China alone is 30% contribution. So this session is about global economic situation. I will not be doing justice if I just talk about this small economy of Hong Kong. So if one looks at the China economic policy, which will be very relevant for Hong Kong, because President Xi Jinping said in his 19th Congress report that he will support, the central government will support Hong Kong being integrated in the national development strategy. Last year, President Xi delivered two very important speeches internationally. One, of course, is in this forum at last year's Davos in January last year. But at that time, I suspect that the global economic recovery was not very certain. So President Xi was talking about leaders in various economies should shoulder joint responsibility to propel the economic growth globally. And then in November last year, which Christine and I were also there at the APEC meeting, CEO summit. At that point in time, I think everybody was very assured that there is now very bright signs of economic recovery. So President Xi talked about that we should really seize the opportunity of a global economy in transition to accelerate the growth of Asia-Pacific. So putting in that context, I try to summarize for our distinguished guests the gist of the economic policy of China, in my view, based on my reading of the two speeches, is how China will continue to uphold free trade and economic globalization, that we should adapt to it and guide it and cushion its negative impact and deliver its benefits to all. Because if economic benefits are not shared by all economies will face one problem or the other. And it should be more reinvigorated, more inclusive, and more sustainable. So with that in mind, since the world is now seeing some driving forces for growth, I feel we should take this opportunity to improve governance, to focus on more trade rules, to have more regulatory collaboration between central bankers and regulatory authorities, to put in place sound social policies to address issues that Christine has reminded us also, poverty, income disparity, and lack of opportunities, particularly for the young people. So I would just like to say that in this term of a government, I will embrace those values. And although we do not practice state planning under the basic law, we are still a free capitalist economy, but we will embrace those values to put in place the necessary social policies to make timely investments in education, to enhance connectivity with the rest of the world, particularly with ASEAN. So last November, we signed the FTA with ASEAN, and we are negotiating several free trade agreements at this moment. So I remain very optimistic about the short to medium-term future of Hong Kong. But as I said, since we are so externally oriented, please keep those tsunami away from us, and then we will be safe. Thank you.
May I, this is difficult, but I don't think we can avoid it. Just to ask one follow-up question, and I'm going to also discuss this with Mary Erdos. President Trump, when he spoke here, I think the most substantive thing, I think, for this audience and this panel is what he said about trade policy. And he said two quite interesting things, one of which was new, and we'll come to that in a moment, and one more traditional. He talked very explicitly, and it's not new, about countries, though he didn't name names, which are perceived to misbehave on intellectual property, and countries that are pursuing industrial policies with government subsidies. I think he used that word. And it's surely no great secret that when he says that, he's thinking about China. And there are those of us who are very concerned at the risk of serious trade conflict. And we have, of course, at the beginning of this week, seen relatively minor actions in this regard. From your perspective as running a very open economy, great trading place, connected to China and, of course, to the US too, how concerned are people where you are that this actually might prove a very destructive development? How do you perceive that risk?
Well, of course, as I mentioned, being such an externally oriented economy and so dependent on free trade, we would not like to see any trade conflicts or trade wars, so to speak. But trade deficit is not something that we are not used to. I remember at a session that I shared with President Trump at APEC, I gave him a figure. I said, Mr. President, the largest trade surplus that America has is with this small economy called Hong Kong at $31 billion a year. And he seemed to be quite pleased with that. So
and you didn't threaten him with protection?
He did not mention his way. He did not mention his way just now. Coming back to China, as I mentioned, from President Xi's discussions in the two speeches, China is still a developing economy. So it will evolve and build in those things that will make trade more transparent, fairer to everybody. But the fairness must be to everybody.
If I may turn to you, Mary Eddowes, I'm very much interested to see whether there's anything in the sort of overall picture of the world that has been presented by these various distinguished representatives of the official sector you disagree with. And I would be particularly interested in your perspective from where you are on the impact of the tax reform, which is obviously a very big issue, and possibly on financial fragility as a representative, very, very leading representative of the private financial sector.
You know, I can't help but sit here, and we're all in this audience. This is the last panel of the 2018 Davos event. And when we think about where we've come from and what we just heard from all the major economies around the world, I think we first and foremost have to thank Mr. and Mrs. Schwab for bringing us together to be committed to improving the state of the world, because the vision to bring together not just policymakers in one area and central bankers in another and CEOs in another and philanthropists in another, but all together to import and export the best thinking so that, and especially after the great financial crisis, how do we get back on a road where we don't have a boom and bust cycle? And here we sit 9 years later. We could be in our second recession post then had we had the regular ups and downs. And we have a global economy that is expanding almost universally. And it is because you look at the people up here on stage and the other central bankers and policymakers around the world, and you think to yourself how incredibly complicated this was to pull off. 9 years, $11 trillion put back into the system, but not in an unthought through manner. So that we are sitting here and we have these people who have worked tirelessly. It is so incredibly complicated to have gotten this right. And what you've done for all of us, especially the investors of the world, to be able to invest in that on behalf of all the pensioners around the world who will benefit from that as they move towards their retirement, I cannot thank you enough for that. And I can't also not thank you enough for giving all of these government jobs such a fabulous prestige, and something that I know all of us now perhaps aspire to do even more so than in the past. And we thank you for that.
Wow. Thank you. It's fantastic.
Thank you.
That's the nicest thing I've ever heard said about central bankers.
So thank you all for coming.
Mark,
Thank you.
well, all the official sector should feel extraordinarily happy. I'm waiting for the but.
There is no but.
Oh, good.
And therefore, it is incumbent on us as investors to watch what they're doing and to not miss a beat and not sit here and think about the greatest worry in Davos that I've heard for the past several days is that there's not enough worry. People are worried that people aren't worried. And It's okay to not be worried. It's okay, as Madame Lagarde said, to celebrate where we are, how we got here, and to not miss a beat on investing so that people can benefit from that, so that all the people around the world who can have access to public markets can be able to participate in the recovery of what has happened and to continue to do so. And so the opportunities, we can talk about them in the US, but they're really almost everywhere. US, Europe, emerging economies, being able to have participation in these companies taking these policies and putting them back to work and reinvesting in their own communities and in their own products and services is exactly what our job is to do.
Do you want to say anything about the great tax cut and how it's going to impact the US and the world?
You know, the great tax cut is really the great tax normalization. The US was just out of whack. And so the fact that we got it done was a very important move for the US competitive nature. How that goes back into play, I think, is the thing that's so exciting for the rest of the world, because what happens in the US can often be contagious for other companies that exist in a multinational fashion or just in their own nations. And so the fact that the CEOs in the United States of America are not just doing one thing with those tax cuts, but doing multiple things. They're taking that money and they're helping the shareholders. You see more buybacks, you see more dividend payments. They're helping the customers of the companies. You will see much more M&A to get better products and services. You see much more CapEx. And then very importantly, they're helping their employees. So it's not just the one-time bonuses that we've heard about. It is wage increases. It is health care support. It is being able to help them and increase their retirement benefits. So it's being able to help them to continue to participate that. And then additionally, companies are also taking that money and putting it back into their own philanthropic efforts in the communities that they serve, in the job retraining. And so if you can continue to see that across America, that is what capitalism is all about.
I'm going to move on now to, unless somebody wants to add on the shorter term risks, to the longer term opportunity. I think the IMF was the first to say we should fix our roofs while the sun shines. I think it's the fund has been rather good on metaphors and various things of this kind in the last few years. So I like that, and it's no longer the new mediocre, which is nice. So the big issue people are focused on is the feeble state of productivity growth. Some people seem to think tax cuts will be enough. But what is your view, Christine Lagarde, of the agenda of fixing the roof, and particularly to make sure the cyclical recovery, and it clearly is a cyclical recovery, will be turned into an uptick in trend growth across the world?
Thank you, Martin. Couple of things that I would like to point out too. One is the productivity numbers that we have are not satisfactory. Productivity prior to the financial crisis was about 1%, which was not particularly high. It's now down to 0.3% in the advanced economies. So that needs to be addressed. Second point is the potential growth needs to be improved as well, because while we are in a sweet spot at the moment, it's not going to last forever, and clearly many of the economies that are growing nicely at the moment are growing above potential, which in and of itself presents risks. So growth potential enhancing reforms, which are going to be country specific. I'm not going to give you a laundry list because it's going to be country specific. Each country has a roof of its own. Need to focus on those two aspects. If I can just focus on productivity for a second, and that will touch on something which I mentioned earlier on as one of the downside risks, which is lack of international cooperation. To address productivity, or the lagging productivity that we have, we need to invest in research, development, and facilitate innovation. No question about that. We need more trade rather than less trade, because trade encourages competition, fosters innovation, and actually is conducive to that improved productivity. And that takes me back to my concern about lack of international cooperation. To have more trade, better trade, fair trade, free trade, reciprocal trade, we need international cooperation. And the concern I have at the moment is that we tend to see a degree of common denominator, which is, yes, we all need that, but it needs a reset. We need to look at state-owned enterprise subsidies. We need to look at sharing of intellectual property rights. We need to look at constraints imposed here and there. Yes, and the IMF agrees with all that, but it needs to be looked at in a cooperative way and through international cooperation. I think that should happen. I was particularly pleased to hear that President Trump mentioned WTO. It's one of the forums in which those things can and should happen, and hopefully through improvement there, innovation that we've heard many of the leaders in the last few days focus on and identify as one of the areas where they want to invest, we will improve that productivity. Final say. Well, Mary, I want to thank you so much for recognizing the efforts that we've endeavored. I don't think that we've completed the job. Having growth is good, improving productivity is good, but making sure that the results of that growth are properly allocated, are properly distributed, and that the growing inequalities that we see in advanced economies, many of them, and stabilized but still very high in emerging market economies, are a threat to sustainable growth. I mean, we've done multiple research on that.
I can't imagine why, but we don't seem to have any real professional politicians on this panel, so they can't respond. Can I just one tiny follow-up?
Yeah.
I was very interested, and this came up yesterday already, but President Trump repeated it just now. He said, if I understand him correctly, that under the right terms, the United States would consider negotiating to re-enter the TPP as a multilateral endeavor.
Yeah.
I think that's the first time I've heard this. So these are, you would have to regard that in terms of the trade agenda we've been hearing so much about as really rather remarkable and encouraging development, wouldn't we?
Yes, I agree with you. I'm not sure it's multilateral in essence, it's plurilateral rather, but, you know, better can be the enemy or the best is the enemy of the good. I think that's a really good indication. One more area, if I may, where international cooperation is also key, and I think favored by many countries, including the United States, actually. It's the fight against corruption. We haven't talked much about it, and I don't want to spend too much time on it, but it's one area which, combined with the fight against tax evasion and profit shifting and all the rest of it, is actually vital to give more hope and encourage our economies.
Mark Carney, you, I think, wanted to say something on this.
Yeah, and you want to speak structural, so I'll try to concentrate there, but I'll start with the cyclical point, which is that we should be seeing a pickup in productivity, as you can appreciate, and particularly as with capital deepening. But another factor in the cyclical sense, which leads to structural, is that we have had, up until very recently, quite low job churn, certainly in the United Kingdom. And part of the diffusion process of new innovations and their application is people moving from learning at one firm and moving to a new firm or setting up a new company. And so we should get that, and particularly at a time of great innovation, that's where you get the productivity pickup. And as you're well aware, and you've written on this, we have a very long tail in most of our economies of quite substandard firms, and I think that's one of the elements of it. It then goes to sort of structural policies around, and I know it's motherhood to say training, but the elements that facilitate people to move, set up new firms. Last point on structural, which is around trade. As people think, I mean, entirely agree with Christine's emphasis there, and also the emphasis of sharing the gains of trade. And one of the things I would suggest there could be some more thought given is the nature of the trade deals, how they can immediately provide a dividend, because it's the nature of the companies that benefit. People have put on in this fora over the recent years free trade for SMEs being an objective. Actually, we've got the network effects and the financing ability to change that. All of a sudden, that's an element of globalization that works for all, brings productivity and brings instant diffusion, but also trade in services. When you think about having a positive set